Welcome back, everyone. Today's discussion revolves around the recent shifts in token swaps versus token sales and uh, specifically what's happening with World Liberty Financial.
Absolutely. It's fascinating stuff, especially with the project's ties to Donald Trump.
Right. Yeah, it's like they're standing out not just for their DeFi mechanism, but also because of the high profile associations. You know, Trump and his family are right there in the mix, which has sparked a lot of debate.
For sure. And this connection, it immediately sets them apart from many decentralized finance projects that usually keep politics completely out.
Exactly. The token WLFI isn't your run of the mill crypto asset. It's non transferable after purchase, which is a regulatory decision to curb speculative trading.
Yeah, very interesting. Right. And that non transferability means you're not going to see the same market frenzy as with other tokens, correct?
That's right. Unlike tokens that can be freely traded, WLFI's model essentially ties it to governance, not immediate profit. It's more of a vote on decisions token.
And speaking of structure, isn't it kind of striking that 63% of the tokens are allocated for public sale, while 20% go to the founding team? It's like they wanted to balance widespread public involvement with a solid core team backing.
Absolutely. And there's that no vesting period twist as well, which is pretty bold.
I get
It
that.
signals trust, or maybe a calculated risk, considering it all falls under stringent US securities laws.
Right. And because of these restrictions, only accredited investors in the US are allowed to participate, which definitely narrows the pool. But it's a move to ensure they're sidestepping any regulatory pitfalls.
Exactly. They're really playing it by the rules as per the federal securities guidelines, ensuring compliance. Meanwhile, they're also actively managing their
Yep, that's
crypto
a key element.
holdings. Speaking of that, let's talk about the swaps. World Liberty Financial has been reported to engage in token swaps with, well, other blockchain projects. They claim it's all part of a treasury management strategy, adjusting their holdings like ETH, WBTC, and, stable coins.
And that's where the differentiation comes in. Token swaps versus token sales. The swaps are basically token exchanges, not necessarily raising funds, while token sales are outright fundraising events.
Exactly. It's like swapping ingredients in a recipe versus selling portions of the recipe itself. The swaps are automated, often smart contract driven, so they maintain existing value rather than creating new capital.
But then the token sales, like what they did with WLFI, initially selling 20 billion tokens to raise $300 million at a price point of 0.0015 each, those are clear fundraising moves, right?
Absolutely. And the scale is impressive considering um, 96% of the tokens ended up being sold after it gained momentum, with major interest from big names like Tron founder
Yeah,
Justin Sun.
exactly. It's interesting how those sales have been structured. No pre sales or early access, if I remember correctly, making it a straight public offering. But isn't that a bit counterintuitive given the regulatory constraints?
That's a valid point. It's a bit of a gamble. On one hand, by restricting the sale to accredited investors, they mitigate some risks, but on the other, they lose out on broader exposure.
I see what you mean.
Yeah, it's a double edged sword. And while the regulatory approach adds a layer of security, critics have argued that such measures make it less appealing to a wider crypto community.
Speaking of critics, didn't figures like Anthony Scaramucci and even Mark Cuban take some rather pointed digs at the project?
Right. Scaramucci went as far as calling it a scammy grift, potentially disastrous for individual investors, and Cuban saw it as an act of desperation.
Yeah, that's pretty strong language.
Now I can understand where they're coming from. I mean, aligning a decentralized finance project with a personal brand like Trump's can polarize opinions, couldn't it? It's like putting a big, shiny advertisement on a tool that might otherwise be very utilitarian.
Right, exactly. There's a trade off between the marketing boost and the risk of losing credibility among crypto purists.
Hmm. And while the Trump Association might drive adoption in some circles, especially among those who are already inclined to follow his footsteps, it's a high stakes gamble because it might also invite heightened regulatory scrutiny.
Yeah, exactly. And let's not forget the technical breakdown they provided about token swaps versus token sales. Token swaps facilitate interoperability, like exchanging between tokens on different blockchains, say, swapping Ether for DAI. Meanwhile, token sales are more about funding projects and enabling early supporters to get involved.
Yes, that's it. And consider this. Token swaps are almost like currency exchanges, where the value is preserved. Token sales, however, are more like um, capital investments, where you might see a significant return if everything goes as planned, but you might also
Right.
face losses. And the WLFI token isn't transferable after purchase, which really underlines that it's not meant to be a trading asset, but more of a governance tool. So, while traditional tokens might be prized for rapid trading and speculation, WLFI is designed for long-term involvement in platform governance.
That makes sense. It's like being a member of an exclusive club where your token is your voting power rather than a ticket for trading profit.
Exactly. And that role is crucial. By limiting transferability, they're also aiming to ensure that only financially sophisticated and regulatory compliant investors participate. It really underlines the project's cautious approach toward US regulations.
Although I still wonder if this cautious approach might stifle broader market adoption in the long run.
That's a good challenge. While the non transferability and investor restrictions certainly align with federal guidelines, they could potentially dampen liquidity and overall market interest. It's a trade off between regulatory safety and market dynamism, wouldn't you say?
Yep, absolutely.
For sure. And the project's treasury management is quite intricate too. They've invested heavily in ETH, WBTC, and stablecoins, trying to maintain liquidity even as market conditions fluctuate, like holding $373 million in crypto assets at one point.
And that diversified approach is savvy because it buffers them against market volatility, but it's not without its challenges.
Exactly. Right. And then you have the operational layer, the use of the Aave protocol on the back end, which adds a layer of enhanced know your customer procedures, mixing traditional regulatory measures with cutting edge decentralized finance technology.
That merger of traditional and decentralized financial practices is definitely a trend to watch. It's almost like bridging two worlds that are usually at odds with each other.
Precisely. And let's not overlook the massive public engagement. Over 170,000 listeners tuned into their launch event, which indicates significant public interest despite the controversies.
True, and it looks like that buzz, regardless of the criticisms, has fueled strong token sales and considerable investments from notable crypto figures.
Yep, it's a mix of innovation, calculated risk, and a dash of celebrity glamour. It's like a high stakes poker game where the chips are digital and the players are a mix of investors and political figures.
Right. Now, looking forward, the project is slated for a Q3 2025 launch with an anticipated fully diluted valuation of 1.5 billion. That's incredibly ambitious.
Yes, indeed, ambitious and a bit unpredictable, given the volatile nature of both crypto markets and political associations. But that's what makes this space so dynamic.
Absolutely.
So, to wrap up, World Liberty Financial's use of token swaps and token sales, combined with its strategic regulatory positioning and high profile backing, paints a picture of a project that's trying to innovate within tight constraints. It's quite the balancing act, like performing financial acrobatics.
And it leaves us with plenty to ponder about when it comes to the future of DeFi and how regulatory, technological, and even political forces are converging in unexpected ways.
Exactly, it's a testament to how the crypto space just keeps evolving. Thanks for joining in on this deep dive. See you next time as we navigate more trends in this ever changing world of decentralized finance.
Yep, thanks for the discussion. It's been truly enlightening.